Good evening everybody, thank you very much for joining in. This is 66th in this series. We are going to speak about a topic which is known as EPS, earning per share. Now EPS is one of the most critical element in business valuation, and basically EPS, even if we are going to exclude EPS, then it would play a very important element for all CFOs as well. From this side, I am Rahul Magan, working as a corporate treasurer in EXS Services India, which is an Indian counterpart of a US Nasdaq listed firm. At the same time, I am acting as a proprietary trader in India, which is BSC, NSC and MCX. You're most welcome to join my 62 million LinkedIn networking, which is at rahulmagan8@gmail.com. Also welcome to see my videos, which is on YouTube. Also welcome to join on Facebook. You're welcome to join my club, which is Foreign Exchange Everything on LinkedIn, having 2,400 global members. I'm also acting as a treasury trainer and business consultant for various forums across the world, predominantly in India and Singapore. And today, again stressing the fact that I'm going to speak about a topic which is known as EPS, earning per share. What do you mean by EPS? EPS is one of the critical ratios in business valuation, although relative business valuation, at the same time very important for CFOs as well. But what is EPS? EPS is one of the most simplistic, but one of the most, I would say, a debated ratio. Now the simple fundamental of the EPS is that, which is profit after tax divided by number of equity shareholders. Now EPS is further categorized into three parts. This is also known as bottom line. Profit after tax is also known as bottom line. So this ratio can be referred as bottom line divided by number of equity shareholders. Now EPS can be categorized into three parts. One is known as basic EPS, another is known as adjusted EPS, another is known as diluted EPS. Now what are they? And further, EPS can be categorized into two parts, all three. One led to leading of forward EPS, and another led to historical EPS. All three would further categorize into two parts, a leading EPS and historical EPS. Now what is basic EPS? Basic EPS is nothing which is bottom line divided by number of equity shareholders. Diluted EPS is nothing but bottom line divided by number of equity shareholders minus, you're going to minus that stocks, warrants and so on, ESOPs and so on. Now third EPS is adjusted EPS. There is no standard formula of adjusted EPS because that's vary from corporate to corporate. Every corporate would calculate adjusted EPS according to his or her own formula. But the basic technique is, it is bottom line plus minus X divided by the same, which is number of equity shareholders, minus ESOP, warrants and all. How EPS play a very critical role? EPS would tell you how much money you are earning per share, which is basically what you mean by number of equity shareholders. So how much money you are generating per share. That's EPS will tell you. But misnomerly, most of the times even CFOs do a mistake. They always calculate EPS, which is a general EPS, which is nothing but bottom line divided by number of equity shareholders. So as a corporate treasurer, it is very much important for you to understand that once you calculate the EPS, you should calculate the diluted EPS. And even in the diluted EPS, the company should have a ready data about how many stocks, warrants would further categorize into two parts, which is known as debt warrant and equity warrant, ESOP, employee stock option plan, and others are issued, which is nothing but options. stock options. That all, if I assume that the total sum is X, so you should be very much particular about which is number of equity shareholders minus X. You should know that what are the stock options and all. Why I'm stressing on the fact that because majority of the time diluted EPS is nothing but an EPS which will tell you about how the corporate structure, how the capital structure would look like, because because the company is aware how much stock option we issued, how much warrants we have, out of the warrants how much debt warrants we have, how much equity warrants we have. Equity warrants would further divide into two parts. One would cover the interest, one would cover the equity parts, how much ESOPs we are having, how much options we are having, so on. So EPS is a very critical ratio. Do not ever try to compute EPS which is based on the general simplistic, which is known as basic EPS. So EPS play a very critical role in not only in business valuation but also in your financial review. As a corporate treasurer and as a proprietary trader, I would like to stress the fact that once you are calculating the EPS, you should calculate on diluted and you should have a justified formula for adjusted EPS, and that you should report to your management. Generally, what corporate treasurers, but the companies also do, they give a guidance about EPS. Like I said, they give a guidance about the leading EPS also. Take a very simple example of Cognizant. So Cognizant is saying, assuming for the next quarter, I would have EPS of $2.13 to 2.50. So they are giving a guidance of diluted EPS, however ranged. So this is a small introduction note, about EPS, earning per share, which play a very critical role. That's EPS all about. You're most welcome to contact me at 919899242978, and also welcome to email me at rahulmagan8@gmail.com. So this is all about a small introduction of EPS, which is nothing but earning per share. Thank you.